Hey guys, welcome to Cycles YouTube channel. In today's video, I'm going to be showing you how to use Fibonacci to trade. Okay, so these are the concepts which I use to apply the Fibonacci. First is the candle break one, also known as CB1, and then it is the dominant break, also known as DB. These concepts were taught to me by my dad. My credit and thanks to my dad. So now let's get into the charts. So what is candle break 1? What is CB1? CB1 is the first resistance level that price needs to break for the trend to shift. It's the first level which price needs to break for there to be a reversal. Okay, for us to confirm that it is a reversal. Okay, so it occurs when price forms a high, higher low, a higher high, and when price forms a lower low breaking the previous low, this is when a CB1 is formed. Okay, in this case it is a bearish CB1. Okay, and for a bullish CB1 to occur, price needs to form a low, a lower high, a lower low, and a higher high. Okay, when price forms a higher high, that is when we can confirm that price has formed a CB1. Okay, so there are also other names for this, but CB1 was what I learned when I entered into trading. Okay, this is to make it simple. We just call this CB1, right? So if you look at the chart, for example, we can see that there is a CB1 over here, a bearish CB1. Okay, because we can see price formed a high, higher low, higher high, and a lower low, breaking the previous low, right? So here you can see this is known as a CB1, and you can also see in the line chart, high, higher low, higher high, higher low, high, higher low, higher high, lower low. Okay, breaking the previous low. So this is a CB1 for the sell side. Now, how do we apply a Fibonacci to this? Okay, so you can see that for us to pull the Fibo, we need to pull it from the body of the candle which broke the previous low to the shadow, okay, to the high. So we pull it from the body to the high. So this is how we apply CB. This is how we apply the Fibonacci to the CB1, right? And these are the levels which I use. Okay, these are the Fibo levels. We can see these are, if you want to take note of, these are the levels. Okay, we have 0, 0 0.382, 0 0.5, 1.618, 1.88, 2.618, 2.88, and 4.236, 4.88. Okay, or we can also, in simple terms, we can call it 161, 261, and 423. Right, and in this scenario which we are seeing in this chart example, we can see that price respected 261 because it reversed from 261. Okay, you can see price reversed from 261 and it formed a CB1 to the upside, a bullish CB1. Right, you see there's a low, lower high, lower low, a higher high which broke the previous high. Okay, so this right here, this is the candle which broke the CB1. So if we, let's say you want to apply Fibonacci to this CB1, we pull it from the body of the candle which broke the high to the low, okay, to the shadow. Okay, so this is how we apply Fibonacci to the CB1. Okay, and this is the one way which we can apply Fibonacci. The second way which we use is using a dominant break. What is a dominant break? A dominant break, or DB, is when a single bullish or bearish candle gets broken by more than 3 subsequent candles. Okay, it can be more than 3, but it cannot be lesser than 3. Okay, so if you look at a chart example here, we have a dominant break over here. Okay, because you see there is a bearish candle over here which is broken by 1, 2, 3, 4. Okay, it took 4 candles to break this one bearish candle which is more than 3. So this fulfills the requirement to be a dominant break. Okay, so how do we apply a Fibonacci to this dominant break? It's similar to how we applied it to the CB1. We take the body of the candle which broke the opening of this bearish candle and pull it until the low, right? So from the body till the low. Okay, and this is how you apply Fibonacci to the dominant break. And if you look at this example here, you can see that price respected 161. It showed a great amount of respect towards 161 because it rejected from 161 before continuing higher. Okay, so you can see, and even at 261, price did give some kind of rejection, but not much before continuing higher. And now we can say, all right, with this CB1 which was formed in H4, we can confirm that price is most likely, it has a high tendency to move towards 423. Okay, so we can set this 423 as a target for us for price to reach. Okay, so this is how I use Fibonacci to trade, right? And the main instrument which I use is gold. But we can also use this for other markets as well, but I mainly use it for gold. Okay, so I hope you guys understood how to I hope this video was helpful and help you understand how to use Fibonacci to trade. Okay, so this is the first video which I'm making in this channel. I will be making more videos in the future, so do stay tuned, do subscribe, and I will see you guys in the next video.